Welcome to the Tesla Economist. Please hit the thumbs up and don't forget to subscribe. This is the final part in our series on whether Tesla can reach a $10,000 stock price by 2030. If you missed the first part, click on the link above. So we've gone through how much gross profit Tesla might be generating in their various business activities. It's taken us a while for us to get through them all, and yes, there's still a few other business activities that we've not included, but I believe we've covered the vast majority of income we should see from Tesla. So now we finally get to add them all up and see what it comes to. Then we can give Tesla a possible valuation for 2030 and see how close it gets to the often cited $10,000 or $10 trillion valuation. Anyway, the really hard work has already been done. This part is a vacation compared to what we've been through. I've also been on the journey with you. I haven't started with a $10 trillion valuation and worked backwards. So let's start with the main number Tesla give us for 2030. By 2030, Tesla plan on producing 3 terawatt-hours of batteries, just for Tesla internal cell production. In addition to that, Tesla will continue to use their other partners like CATL, Panasonic and LG. Elon says they think they have a good chance of achieving that before 2030, but highly confident to achieve it by 2030. But let's not even depend on the other battery suppliers, despite the fact I think it may be possible that by that stage they may collectively have a further 3 terawatt-hours of batteries available for Tesla. Let's work solely with what Tesla can produce themselves. So it might now become apparent to you why we worked out profit per kilowatt hour for the industries. So we estimated that Powerwalls would consume about 400 gigawatt hours of the 3 terawatt hours, leaving 2.6 terawatt hours for energy and transport. As far as I can tell, there isn't really much indication as to what proportion of the main batteries will be split into energy and which into vehicles. I think by 2030, an average battery size of 43 kilowatt hours would be about right for each vehicle, due to more efficiencies in the drivetrain, motor, software, battery density, manufacturing making lighter structures, and the compact car being such a big seller with a much smaller battery size in general. And despite Elon saying there'd be at around 20 million vehicles in 2030, judging by our analysis, 28 million even seems on the conservative side. This would therefore mean that battery consumption for vehicles is 43 kilowatt hours times 28 million, or a total of about 1.2 terawatt hours, leaving 1.4 terawatt hours for energy. So that's basically half for energy, half for cars, which is probably where I'd expect it to be. Now we've allocated an amount for batteries available to vehicles, it all becomes very simple from here. We're calculating $360 profit per kilowatt hour for each car, and with 1.2 terawatt hours, that comes in at a total gross profit for vehicles of $432 billion. With a 30% margin, it equates to a turnover of more than $1.4 trillion, and an average price per unit of just over $50,000. That may feel a little bit on the high side, but don't forget there'll be a lot of semi-trucks sold, which are going to be expensive. There will also be Cybertrucks and vans, which are also going to be very big sellers, and on the more expensive side. Of course, feel free to change the numbers as you see accordingly, but I think either way, it's going to be in that ballpark. Of the 28 million sales, we're going to work on half of these cars purchasing FSD, and the cost of FSD being $20,000, giving a turnover and profit of $280 billion. With 1.4 terawatt hours of energy storage and $400 profit per kilowatt hour, then we're seeing $560 billion in gross profit, with revenue at close to $2 trillion. Remember though, the way we factored this in was with some creative accounting, as it's likely the energy storage will not be sold and it will be managed by Tesla as ongoing accumulative income. Needless to say, the accounting we're using to value the company should work out this way. Powerwalls had a lower kilowatt hour profit compared to energy and vehicles, but I believe this is because we did not factor in the extra income they generate from AutoBidder and vehicle-to-grid integration. I believe there will not be a direct vehicle-to-grid integration, judging by what was being discussed on Battery Day. I believe it will function with a Powerwall, so I think there is actually more income potential there, but I didn't find it overly quantitative and didn't want to speculate by pulling numbers out of thin air. Just bear in mind there could be more potential value in the Powerwall. Anyway, we have a further $30 billion a year in gross profit from Powerwalls. We thought Tesla might sell about 100 gigawatts a year of residential solar. This could come into at $30 billion a year gross profit. Again, in association with Powerwalls and AutoBidder, this too could be more valuable. I've left out commercial solar in this entire model. I believe they'll most likely be using the grid. And sure, some will not, and you're most welcome to add whatever you think it could be there. Heat pumps is also a reasonably sized market, producing $36 billion of gross profit, but the main focus being to reduce the actual requirement of all energy creation in order to transition to renewable energy. Considering how much energy is consumed in heating and cooling, it makes a lot of sense to reduce the consumption as much as possible. We've estimated by 2030 there'll be 85 million Teslas on the road. There should be no reason that any Tesla owner doesn't use Tesla insurance, given how it should be the best value out of any other option. But we're still going to err on the side of conservatism and say we have 50% of owners using Tesla insurance. With the average price of insurance being $1,000 a year and a margin of 30%, we get to nearly $13 billion profit a year. Not that great relative to some of the other products, but I believe a necessary product for robotaxis. Which brings us to robotaxis. I've estimated a global fleet of 20 million by 2030, but the true potential of this service is much higher than that. If boring tunnels become what they could, then transport alone could be 5 to 10 times faster, especially in urban areas. If what some people think, and robotaxis could end up replacing all cars, and if without boring tunnels they have 5 times more utility, then with about 1 billion cars on the road now, that alone could equate to only 200 million robotaxis to do the same work as all current cars. If you do include the potential of boring tunnels, then perhaps half that again. In other words, robotaxis aren't just an alternative transport, they can dramatically reduce the number of cars required in the first place. So we came up with about $250 billion gross profit a year for robotaxis for Tesla. But if they did become the main form of transport, replacing the majority of cars, then that number could be tenfold. I've left out superchargers as income. I believe it's pale in comparison. I've also not included servicing and parts, and a lot of that may be covered under insurance anyway. I felt like these are Tesla's core products and should gather sufficient data as to whether we can reach our $10,000 stock price. We're also going to exclude regulatory credits and any profit Tesla have made from Bitcoin investments. Likewise, I've left out any other future products that Tesla might come up with over the next 10 years, such as the likes of electric planes or even their app store. Any other future vehicles are included as we measured them by kilowatt hour per battery they can produce for vehicles, but I don't think there's any reason for this company to stop innovating. They won't be able to help themselves with the talent they've pulled. So that brings us to a total revenue of $4.6 trillion with a gross profit of $1.6 trillion. Now to work out our 2030 valuation, we need to calculate the net profit. So now we have to factor in all the costs not associated with the cost of goods. Let's start with R&D. So in 2030, Tesla have robotaxis, they have energy storage, auto bidder. All the plans we've been hearing for the last few years have not only come into fruition, but have matured and are now thriving. So what's left to research and development? Will Tesla simply stop there and be a cash cow? I find it unlikely. Not now, when they have enough money for anything. What else will they do to change the world? Well, given that in 2020 they spent about $1.5 billion on R&D, and with them now bringing in over $1.5 trillion in gross profit, I want to say $50 billion a year would not be too far from what might be spent on R&D. I mean, sure, they could afford more, but there comes a certain point where it's just wasted, and it's hard work allocating $50 billion into R&D, and there are only so many scientists and engineers in the world. $50 billion is an absolutely insane number as it is, so let's just run with that. For selling and general administration, Tesla spent nearly $3 billion in 2020. With them at a level selling 50 times as many cars from 2020, then I think $100 billion should be ample to cover SG&A, as it's not an entirely linear expense to the production. There are certain fixed costs that don't increase with sales. There's the cost of servicing, but if a lot of cars by this stage have run out of their warranty, then this should actually be profitable if anything, so we'll simply exclude this side of the business. I'm not sure if Tesla will be advertising yet either. Their cars will be everywhere by this stage, and superchargers will be seen everywhere. Everyone will know what a Tesla is. I'm also going to include another $100 billion in there in case I've missed anything, or capital expenditures, or perhaps any interest payments too. So that brings our total expenses to $250 billion, which comes to a net profit of $1.4 trillion. So let's see if that's enough to hit our $10 trillion valuation. If you recall, we're looking at a P/E ratio of 20, so if we multiply $1.4 trillion by 20, we end up with $28 trillion, which could come in at pretty much $30,000 stock price, excluding any future splits. Now, I know some of you are thinking $30 trillion valuation is crazy. There simply isn't enough money in the world to justify a corporation of that size. However, that's not how business works. It's not a zero-sum game. Good businesses just create more value in the economy. Take, for example, the invention of the plough. It's preposterous to think that because people are spending money on ploughs, that suddenly they couldn't afford money on shelter or clothes. No, the plough meant that everyone could have more food. It created more abundance. And this is what good businesses do. Business founders are the reason you get to sleep at night in a comfortable bed with heating and artificial light. Good businesses improve the standard of living for everyone. Remember, this is all based on just one person running some numbers, using some ideas of how you could possibly predict where Tesla will be in 10 years. But the one thing I have learned is you can never predict the future. And there can always be black swan events. Also, remember, I'm only human. It's always possible I can make mistakes. But I've shown all my calculations on the way for you to follow. Correct or edit how you see fit. Obviously, my numbers will likely be far from the real numbers, but the point is, it's something to base them on, to get some idea. And my numbers may only be within 2 or 3 standard deviations of the real number. They may not be in the ballpark, but they may be near it. Even if the revenue or gross profit or net profit are 1/4 of this, it's still a good stock to buy and hold. And at the end of the day, that's really all you need to know. And it would appear that if this is the case, then there's probably a good chance Tesla would still be around $10,000 stock price. Any of my numbers you disagree with, simply change the way you see fit. I explained every way and reason I arrived at every number. So if you feel that you have a better way, then simply run your own model the way you see fit. And please leave a comment on what you've changed and what your final numbers were. I feel like we're on this together, collectively working out what this company could be worth. None of us know what it will be, but doing econometric models like this might give us some sort of glimpse as to what it could possibly become. And sure, there are other factors that might affect Tesla, such as government intervention trying to break up Tesla as a monopoly. We never can be too sure what will happen. Anyway, I'm very glad to have finally got through this series. I hope you all enjoyed it and are satisfied with the result. If you are, then please hit the thumbs up and don't forget to subscribe.